Hello and welcome to Portfolio Matters. And today I'm very pleased because we have Luke Oldfield on to share his worst trade in Arian silver. But before we do that, Richard will read the disclaimer.
Thank you very much, Keith. Hello, Luke. Nice to see you again. Everything discussed during the Portfolio Matters podcast is for informational purposes only and should not be considered as investment advice. Listeners should be aware that we will be discussing securities that we own or have a financial interest in. Please do your own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. The views of any guests we may have on the show are entirely their own and may not be representative of the views of Portfolio Matters. A full disclaimer can be found at the end.
Take it away, Luke.
Arian silver. This was one of my very first trades in the stock market. So a lot of the mistakes I made here can be really put down to a lack of experience in general. You've kind of highlighted some of the key learnings here, which are very good. Number one, don't believe the hype. I certainly got caught up in that. Try to remain skeptical. I definitely was not critical enough with my analysis of this company. Don't just listen to the bullish CEO. I certainly listened to a lot of interviews that kept me hanging on in this share far too long. Listening to counter arguments, I was guilty of just dismissing any negative arguments on this one. That was a silly mistake. Top slicing profits. Yep, I didn't cut my losses. I didn't top slice my profits, and I didn't cut my losses early enough at all. The last point is better to travel in hope than to arrive. So let's have a quick look at the chart here. First point to make, this is the title of this chart is Alien Metals. So this is what the company is now known as from, I think, 2018, but was formerly Arian Silver. So you can see it's been a pretty volatile share price. It shot up and then came flying down with several sort of false rallies during the downtrend. And this really matches what happened to the silver price at the time. So the green arrow here is roughly when I think I first started buying into Arian silver in mid-2010. And at the time, this was a pretty bullish market for precious metals. There were a lot of exploration stocks that were sort of flying up on very little. And for some reason, I kind of thought that was the norm. And so I got far too carried away with this particular stock. I suppose the first mistake is I should have been buying down here when it was around 5p a share before it had attracted any hype. And this is where I sold at a huge loss, pretty much at almost the worst point possible. Let's have a quick look at the next slide. So you've highlighted on here some key dates that informed my decision making. First off, we had, I should probably say the story of Arian Silver, where they were an exploration only company to start with. So they were raising money to discover a large silver resource in Mexico. But why I sort of got invested was because you said as September here, they started initial production, and the plan was that was going to self-fund their whole exploration program. So there was going to be little fear of equity dilution in order to raise money to prove up the resource. And the story was that they were going to be selling this resource to another company to produce and exploit. Now I started buying in roughly here around, I'd say my average was about £2 a share, and the share price actually did well. I was buying into a rising trend and topped out at about £5 a share. If I just quickly go on to the next slide, and then I'll come back to that one. This is a really good chart that you've done. This overlays the silver price against Arian share price. So you can see it pretty much tracks silver completely. So I was buying into a rising silver price, and I was buying into all of the sort of bullish sentiment about precious metals at the time. We'd had the financial crisis, obviously, in 2008, 2009, and there'd been a lot of fiscal stimulus coming out of that, and that seemed to be feeding into inflation. So I was thinking, this is normal. Silver price should be going up with all the money printing, but I didn't realise it was going to be such a short-lived spike. And as the silver price came back down, so did the share price of Arian Silver. If you just go back to the chart here with the dates, the first kind of red flag that I ignored was directors selling some of their share options at around 31 pence a share. They sold, quite a lot. You said 6.7 million shares here. This share price had had a 10-for-1 consolidation, so it looks like it's £3 on the chart here, but it was actually 31 pence back at that time. So I think the two main shareholders, the brothers, sold 2.25 million shares each of their options at that point, so a huge chunk of cash. But this went for around the market price at the time, so people were saying, oh, that's a good sign. There's obviously a lot of demand still for the stock. Don't worry about it. But I think looking back, the directors probably knew that the share price was getting ahead of itself, and they may not be able to sell the silver resource for this kind of money that the shareholders were anticipating. So the share price did continue on for a short while after that, peaking at about £5, and then started dropping. But I held on, because if we flip back to this chart here, you can see there's a bit of a lag between the Arian share price and the silver price. So the silver price didn't peak till April here, and the shares had already started dropping. So I couldn't understand the correlation here. I thought it should be, one-way traffic. The problem with the Arian model of this self-funding production was that they were contracting this out to another company, and they were using a mill that was not fit for purpose, really. It was very small scale, which was fine when the silver price was buoyant, because they were producing enough cash flow to fund the exploration. But as the silver price started dropping, the high cost of this small scale production started to mean that they weren't generating enough cash flow to keep the exploration going. I think at one point they actually had to stop exploration for a short while. So the directors had a choice, really. I suppose they could have continued raising money via equity placings when the silver price was lower, but they chose to go the route of taking on some debt to purchase a bespoke mill for the mine that was going to be greater production and more efficient, because it was more suited to the hard rock material they got there. So that was going to improve recovery rates and reduce the costs. But silver price kept dropping all the time. They had this mill being built, and before it got delivered, it was just too late, really. They were still only at around break even by the time the mill arrived. I think you pointed out in an email that you remembered that there was actually some theft from contractors in the old mill, which is a bit of a red flag in terms of corporate governance sort of control over the contractors. So that kind of glossed over the low recovery rates they had, because that was used as an excuse. But I should have been some more critical there into looking at why their recovery rates were so low, and it was because the ore was hard rock, so it's hard wearing on the mill and the parts. So when they had the bespoke mill finally delivered, as I say, silver price was too low to make it profitable, really, and because they'd taken on a big chunk of debt to do so. The share price just kept spiraling, and I think by 2015, you've got here that they actually went they actually lost control of the mine to the creditors, and shareholders actually ended up with nothing.
Yeah.
So I know I stopped posting on the bulletin boards early 2014, and I bought my flat in January 2015. So if I hadn't taken what was left on the table at that point, I might have just kept holding on and ended up with absolutely nothing. I think I was a little bit like a rabbit in the headlights when the share price started coming down. I couldn't understand how silver could be so volatile. I don't think I'd really looked into the history of previous silver spikes and sort of worked out what the general sort of long-term average should be. So that was a big mistake. There had been negative discourse from people on the bulletin boards that were trading the ups and downs, and that sort of started to get on my nerves, and I was sort of ignoring all their negative arguments and being a bit stubborn, thinking, well, I'll have the last laugh when the silver price goes back up and they sell the mine, but it never happened.
Luke, can I ask a question on the bulletin board? Did the flavour of the comments sort of change as the price went from effectively sort of being exponentially up to more or less a straight line down? What?
Yeah, over time, definitely. The people that had been suggesting that it was a good sign that the directors had sold their shares and they'd all been taken up by the market started saying that it was, opportune by the directors and a clear signal that something wasn't going right, that weren't going to be able to sell the mine on to another company that they had suggested they were going to do so. Yeah, the narrative certainly changed.
And were there any commentators on the bulletin boards who were perceptive and understood that this wasn't going to be a success before the price started to drop?
Before it started to drop, I don't remember, but certainly when it was in the downtrend, there was one individual I remember that kept coming on and almost gloating about how they were trading all of these spikes on the downtrend and shorting it in between. And I just thought, how are they, trading this all perfectly?
Yeah.
And,
I wonder whether
I just didn't listen to their negative arguments.
Yeah, well, I wonder whether, obviously the bulletin boards are a useful source of information, but of course, mostly people who post positively on a bulletin board all have the same psychological bias, don't they? And got that sort of anchoring bias, and therefore you can get inadvertently you can get self-reinforcement, and I guess you need to be aware that can happen, but at the same time it's very difficult to if you happen to believe it yourself, it's difficult to dissociate yourself from other people being positive.
Yeah, absolutely. It certainly can become an echo chamber on some boards, and I've kind of learned from that. And on some of the ones I post on now, if a negative poster comes on that's actually got quite good argument, I say to people, don't disown this person, let them post, because we should be debating what they're saying.
Yeah.
And that's good, because sometimes people come on with nonsense, and that just strengthens your argument, and you can just filter them and say, well, they don't. They're not research. I
think we've mentioned before, haven't we, that one of the things that George Soros says in his books is he prefers talking to people who disagree with him, because that challenges his point of view, makes him think hard about whether he's right or still right.
Yeah, absolutely. I should have been comparing the valuation of Arian silver to peers, but unfortunately they were the only pure silver play on the AL market at the time. So the other ones would have been Canadian listed, I think. But even so, it was a very buoyant market. A lot of explorers were shooting up on, just drilling results to crazy valuations. So it was hard for me as a new investor to really understand what was a sensible price.
So, Luke, can I just ask, now you've, because this is, quite a long time ago now, best part of 10 years. So with all your experience in the market since then, what would you do different?
I would have definitely taken some profits off the table, if not at the top, then when it started coming down and silver price was going down. I would have been, reassessing the arguments for this. And I know I was just guilty of listening to to people that were saying, silver's only going one way, it's inflation finally catching up, it's been suppressed for far too long, but it can stay suppressed. And in fact, it went right back down into the low teens after having spiked at $48. So it's crazily volatile.
Because when you were talking earlier about you wish you'd got in earlier, obviously, we all wish that on all our shares, and that's just not possible. So, because a lot of these companies, you buy them when they come onto your radar screen. And actually, you could have got out with a very decent profit here. And this trade reminds me very much of some of the my worst trades I've done, where, it starts coming off and, in the case of, say, Hurricane Energy, I still believed in the story and I just kind of put it to the back of my mind. And actually, if I'd taken a bit of money off the table like you did, you were saying, then I would have been absolutely fine. And the other thing I would say is that I'm currently been working on a small copper miner called Castillo Copper. And one of the interesting things I've learned is how they are presenting their drilling results in the best possible light, to put it kindly. And the way it's been an education in how these mining companies, hype their results. And actually, that is something I'm learning right now. And it's very easy actually to read these RNS statements, and the way they're presented is like everything looks great. And, you really have to look at them with skeptical eye. And, even now, and I've been investing in the stock market about 30 years, still learning. So,
yeah, I think you have to look at A, obviously grade, B, obviously the width of the intercepts that they're reporting, and also the depth at which they're mining. Something that's near surface is a lot cheaper to get at than something that's
you also I think you also have to understand the sort of human nature of the directors, don't you? That if they're running any small business, they need their share price to be up because they may have options. They may need to issue equity for cash, and therefore and they hold shares themselves. They don't want to be diluted, and so they have all the same drivers really that a startup business has in terms of wanting to maximise its value. And as Keith says, if they are careful to present all the information in the RNSs in a very positive light, as a private investor, it's very difficult to differentiate between what is genuinely positive and what is made to appear positive, and it's a difficult thing to do. I guess the other point I'd make is it comes back to the bulletin board thing, that in some senses you're trend following, and we all do it. So you see something going up and you think, great, I'll trend follow. But the reason it's going up is because everybody else is trend following. So all you actually have is a whole load of trend followers, and that then, if there isn't any substance to it, that becomes quite unstable, as we can see in this graph. And one doesn't want to be a trend follower. One wants to understand why the trend is doing what it's doing, and then if you leave it, follow it.
Yeah, I mean, this was a difficult one for me because they were having exploration success. They built it up from something in the tens of millions ounce resources to well over 100 million ounce resource, and that was really driving the share price. And they were saying, if we can just keep this going, there's at least 200 or more million ounces to prove up. And then when you multiply that by the silver price at the time, which is $30 or so, you're talking about billions of pounds resource value in the ground, and then the market cap only reached the peak of 140 million pounds. So there was an argument there that, if they can do a successful sale and the silver price remains reasonably buoyant, they're going to make even more money. So I was always hanging on thinking, well, I want to get back to that and even more. And they were dangling a carrot of, once we've got the new mill, we'll have the funds to get the exploration going again, and the new mill will be profitable because it'll be so much better. But I think this was an exploration company that were forced into trying to become a miner because nobody was going to buy the resource whilst the silver price was coming down.
Yeah.
And they didn't have experience as miners. So I think.
Yeah. And also, I guess, think about this as an example. I mean, we are currently interested in a number of resource companies, and as the price goes up, that increases the value of the resource company, as we know. But the question then has to be, is the price going up because there's a genuine shortage, or because there are speculators pushing the price up? And that's very hard to differentiate as well, isn't it? But you can, I mean, in the case of silver, we know there wasn't with the benefit of hindsight, we know there wasn't a genuine shortage. And it was speculative before. And it's I guess, if you're looking at resource companies, you have to understand what the true nature of the underlying resource market is.
Yeah, it feels at the moment there are a lot of resource stocks with quite large resources that are still very lowly valued. Like you look at Alton Gold, for example, they've got a 6 million ounce gold resource, which would have been far bigger than Arian's equivalent silver resource, and they're producing, and yet they're only like a £40 million market cap. So it feels at a different stage of the cycle at the moment. So you could see a repeat of this kind of bullish speculation coming in the next year or two. So there could be some great short-term gains to be made, but I'll be much more wary about getting off a bit early.
Can I just make a couple of points, actually? Because when Richard talks about momentum investing, I mean, I would say that this could have been a fantastic momentum investment. I mean, essentially, you'd more than doubled your money at one point. I mean, well, what you failed to do, Luke, is just get out when the going was good. And actually, what all these my worst trades have in common is that we're basically not getting out, not selling your losers. And the other thing I would say is that, when we were talking, my point about it's better to travel than to arrive is that this chart, you notice it peaks just after they've started production. So it's like whenever there's hope, people always extrapolate the best possible case into the future. Yeah. And then actually you often see the peak of these charts is when you can't hope anymore because you've got real production and you have real numbers and you know what things are. And then you can't, basically reality has hit. And so I think one of my lessons from investing in small resource companies is actually you want to sell actually fairly early in the story when you think that hope is at its maximum, not necessarily when production is at the maximum.
I think that's a really interesting point, Keith, actually. I think that's a really good point to make. And it's saying that this point of, in this case, 22nd of September 2010, is a danger point, isn't it? And it's the same in all small resource companies. You need to be really aware that is a danger point and to be really careful. And of course, it then proceeded to nearly triple from that point, didn't it?
Yeah, absolutely. So, I mean, it's always very difficult to time the selling. I mean, this is something we've discussed time and time again. But, when it's the silver prices keeps on going up and Arian silver's coming off, I think that, in future, that would be a signal.
Last question, I think, from me, Luke, is that did the directors have prior experience / success of running mining companies? I
honestly don't know. And that was another mistake. I hadn't done enough due diligence into the directors' previous positions and how well they'd done. And that is actually, a really key point, because I think management in a business is far more important than what the resource is. You see a lot of promising resources that go to nothing because the management completely stuff it up, whereas good management can turn a profit on a modest resource. So,
Well, when I was looking through this Arian silver, I noticed how many share sales there were. They were absolutely extraordinary number. There was something in was it 2011?
The last slide here.
Yeah, the last slide.
Yeah,
2010.
Yeah.
they were issuing shares, every month, more than every month.
Wow.
And it makes you wonder, if it had been a success, I mean, how much of it was actually going to go to shareholders, actually. There's one of those patterns that you really don't like to see. There's constant share sales.
Yeah, I guess they were making best use of the rising share price and the rising silver price to get some money in the bank to keep their exploration going.
When
you look at that, it was very regular, isn't it? A lot of small ones and then a couple of big ones.
Yeah, no, that's true. But if they have confidence in their project, they wouldn't be issuing shares; they'd be issuing debt. So red flag for me. I really don't like it when companies issue loads of shares.
Yeah, good point.
Although, you're invested in Rambler, who's got 10 billion odd shares issued. I am as well. That's a different kind of situation. That was more of a one-off.
Exactly, but that's a completely different situation, Luke. Yeah. And that's one of the reasons I like it, is because in the case of Rambler, you had a debt for equity swap. So, you have the original holders got completely wiped out. They had 5% of the company after the debt for equity swap. Yeah. But since then, there have been a couple of well-flagged placings, and there hasn't been this constant drip, drip, drip. And, what you want to see is just, we're going to do this, and it's well-flagged to investors, whereas all these share sales, just kind of going on below the radar screen. Okay. Well, Luke, thank you so much for coming on board and doing a My Worst Trade. I really enjoy these. I find them so informative, and it's like real people investing in the stock market telling us their war stories. And if anyone is viewing and wishes to come on, we would love to host you.
Indeed, and thank you very much from myself too. A really interesting story, and thank you for sharing your mistakes. And there are a lot of lessons that come out of these, and all we can do is try and add them to our sort of general sense of our understanding of how the market works.
So we have just started a Discord channel. I think it believes a Discord server, in fact. And I've been contacted by various of our viewers, including people who are just starting to investing in the stock market. And I think these are incredibly useful for people who are new to the market. This is what real investors do. And the point of these My Worst Trades is that, to learn the hard lessons that other investors have experienced so that you can hopefully avoid them. So if any other investors were willing to share their experiences, that would be great. Indeed. So it's goodbye from all of us.
Goodbye.
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 Full disclaimer. The material and information contained in this podcast is for information and entertainment purposes only and should not be relied upon for making a business, legal or any other decision. We may own or have a financial interest in any securities mentioned. Listeners should conduct their own research or consult a professional investment advisor before making any decisions regarding topics mentioned on the show. Whilst we endeavour to ensure that the information presented on the show is correct, we make no representations or warranties of any kind, express or implied, with respect to the podcast and website or to any information, products, services or related graphics discussed or presented in the podcast or website. Any reliance you place on such material is strictly at your own risk. You are solely responsible for the investment decisions you make. We will not be responsible for any errors or omissions in the podcast or website, including in articles or postings, for hyperlinks embedded in messages, or for any results obtained from use of such information. Nor will we be liable for any loss or damage, including consequential damages, if any, caused by a reader's reliance on any information provided by the podcast or website. Please do not listen to the podcast if you do not accept self-responsibility for your actions.